This is Starting Up with Virtue Zone live each and every Thursday, 1 through till 2. And it's great to have Neil Petch alongside us. The chairman of Virtue Zone is with us through till 2. Good week for you.
It's been a fantastic week. Looking forward to, the summer is upon us. And it's a time when we can be proactive, when we can put in the plans that we've thought about all year but haven't had time to action. So you see, there is a rose-tinted lining.
To that though, I can remember you and I sat in these self-same seats this time last year.
I don't think we were sat, Tom. I think we were sitting.
Oh,
just in case my mother is listening.
Is your mother listening? We were sitting in our suite, in our respective seats, and we were talking about the summer. And you were like, "It's not going to get quiet this summer. It's going to be business as usual." And you were right. You forsook
Tom,
that one.
Bless you for saying I was right.
You were right. It was a busy summer.
That's why you get the big bucks.
Is it going to be a busy summer this year?
It's going to be. Do you think the traffic is going to recede a little on the Sheikh Zayed Road? Possibly a bit.
Yeah.
But our first guest has just been talking about how you can use Zoom calls to do this sort of thing. So let's see if there's a solution in technology.
We do love a good success story here on Starting Up. And so, in fact, does our first guest this afternoon. In fact, he and his partners are always on the lookout for a successful business to support through private credit investment. It is a warm return to the show. We can't have been too bad last time because he's accepted our invite to rejoin us here in the Dubai Eye studio. Partner, Ruya Partners, Omar AlYawer joins us live here in the studio. Omar, bless you. Thanks for battling the roads to be with us here today.
Absolute pleasure, Tom. Neil, great seeing you again.
Good to have you back. How's it been in, the year or so since we last spoke?
It's been quite a busy story for us, as you had seen, not just in UAE, Dubai, but also in Saudi. So it's been running on full pistons, helping entrepreneurs grow their business further. And so it's been a
Tom, can I refresh the listeners? Because we've got some new listeners. We've got 3 new listeners to the show this year since Omar was on. So, guys, when you're raising money to grow a company, you can IPO, you can get bought out by someone, but very often you think your company's doing so well, you don't want to dilute your shares, you want to raise capital, and that is where this gentleman can step in. Did I say that correctly, Omar?
I think you hit it right on the head. In a world where a lot of entrepreneurs have gone to a stage where it doesn't make any more sense to keep diluting their shareholder equity, but they're at their last run before the big next event for them, that's where we step in. We give them non-dilutive capital to help them grow their business further, allow them to keep growing their business as the way they know how to, without getting people stepping in and telling them how to change the way they run their business. That's where we come in.
Non-dilutive capital. I can just see you in Zoom saying that and everyone around you being impressed.
Sign me up.
Sometimes teams as well. So we're multitasked at Ruya Partners.
You mentioned Saudi Arabia a minute ago, Omar, and obviously, plenty of eyeballs and interest on the Kingdom of Saudi Arabia at the moment, none more so than with you and all the team at Ruya Partners. Big news since you last came onto the show was your partnership in the form of private credit with a very well-known fitness and wellness brand. $25 million to the tune of a partnership with GymNation to help them expand solely in Saudi Arabia?
No, not solely in Saudi Arabia. A big part of their growth is Saudi, yes, but also a bit more in UAE. While they are already the leading gym fitness outfit in UAE with over close to 80,000 members as of today, there's still a lot more ground to cover. But the real big growth plans for the business is Saudi. Where they're going to apply the same metrics they've done so successfully here in such a few years, but do it in the kingdom across all the main cities of Jeddah, Riyadh, and Khobar.
Listen, you would have had no shortage of buff gym owners knocking on your door as well. Why GymNation?
GymNation has done something completely different than all the gyms that we've ever seen before. The way, first of all, the founders are also the ones who are running the business, so you have real passion behind the vision. They apply technology in a way that no other gym that we've seen has been able to do so, and do it on scale. We've seen high-end gyms, for example, who come in with 1 or 2 locations, and that's kind of where they tap out. But to do it on large format, if you've seen GymNation, or you've been to any of their locations, they're large format gyms. They're cost effective, but that does not mean they don't have good equipment. They have the top equipment. They have large footprint, and they have parking, which, needless to say, in places in UAE and Saudi are really sought after. If you're not going to be comfortable getting to the gym, chances are you're going to forget about your membership.
We look here and we look at the fitness, the wellness. I can't remember what they're called this week. Every week there seems to be another phrase around the industry, but let's call it wellness for the sake of arguments. But this wellness industry here is expanding extraordinarily. The predictions for it's going to be worth moving forward is key. And a lot of people suggest that that's because, we live in a very image-driven society here. It's all about now. It's all about how you look as well. Is it the same now in Saudi Arabia? Is there a tappable market?
What's going on in Saudi Arabia is quite fantastic and exceptional in the fact that you have a young population, quite affluent and very driven to improve all aspects of life, including your own health and fitness. Yeah. While the aesthetics part of it is part of the equation, the real underlying is how you feel and how you're able to behave with your families, with your work. If you're not healthy enough, you're not going to really be successful for that long. So what we're seeing across Saudi is the hunger and the need for better gyms and better offering at a low cost or a value cost rather than going for a very high-end 1 or 2 locations. So we're seeing that across the kingdom, not just in Riyadh and not just in Jeddah or Khobar.
I want to just come back on what Tom was saying, Omar, because there have been some big investments in the past in this wellness sector. And some of them have bombed, let's face it. Great brands, but they've bombed. You mentioned something which just stuck out to me, which was the technology side of things. You said scaling. These are all, these are words that we need to think about as investors. How is the technology that they're using enabling someone that's listening to this that would like to use their facilities? How is it setting it apart and thus turning into a great investment for the founders and for you guys too?
Sure, it's a great question, Neil. Unlike other gyms that we've seen before where they typically, a usual journey of a gym, it doesn't matter if it's just a pure weightlifter's gym or perhaps a Pilates gym, typically they open up one location, they spend all their CapEx, and then they start looking for customers. They open doors and they hope to break even at some point. That equation is long gone. The folks at GymNation, because they're owners and operators of the business, they treat each location as it's their new baby that they're actually bringing into this world. They have so much attention to it from not just physically being there, but using technology to be able to harness customers joining in before they even open doors. That and the level of detail, if you ever get a chance to go see their head office here in Dubai, you'll see that each location has almost, you think you're in a NASA headquarters in terms of the level of detail of how many members are joining, how many members have exited, how many members would like to be brought back into the fold. And they know that on a every single day. So they have a dashboard, a technology that they've developed along with third-party software, but they know exactly when they're opening, how many members are joining, how many members need more hand-holding before you actually lose them. Typical gyms don't do that. Typical gyms, they have just somebody they hired, they sit on the front desk, you can sign in, you may not even sign in, you can just bypass the security. So there's a lot of leakage in gyms. They don't have that.
So 25 million, it's to me and to Tom a lot of money. Sometimes the more money you've got, the more money you can waste. So the key is to get it right. What are the top 3 things they're going to do with this money?
The first and foremost, maybe give you a bit of color on the deal itself to help kind of demystify where that money went. The first part of it, they were owned the largest equity owner of that business was JD Sports, a FTSE 100 company out of the UK, which they decided to divest from non-core assets. That gave the management team and the founders effectively an opportunity to buy back their shares to be the owners again of the largest equity part of the business. We helped them finance that acquisition. Along with that acquisition, the rest of the money is going toward big expansions. 12 locations between UAE and Saudi to really help them go from 80,000 to double that number in a few years. 12 locations just this year in 2024. So what do they need to do? The top 3 things. Stay disciplined in terms of their exact strategy that got them to where they are today. Do not divert from your strategy. If it's one of the number one things we tell our entrepreneurs, whether they've been around for 5 years or 2 years or 10 years, stick to your strategy that got you there. A lot of times entrepreneurs lose track or lose sight of their goal or what got them there, and they start taking new ideas with missing the actual what got them there. That's number 1. Number 2, be financially disciplined. What we love about what they are doing at GymNation, because of the tech enable that they have from client retention as well as their finances, we know on a weekly basis where they stand financially. So as an entrepreneur, if you're not good in finance, make sure you bring in a partner that is.
Yeah.
And the third thing, make sure that you have real skin in the game and have ownership of the new locations. To give you an example, two of the members or the founders of GymNation will actually moving to Saudi to oversee the entire expansion. Do not pass it off to somebody else that you hired, irrespective of how great and how well established they are. Own that business, especially for new geography like Saudi. Those top three things are a sure thing to make this a continued success.
Okay,
story.
next question. So I'm in the offices of Ruya Partners. I'm trying to get you to invest in whatever my business is. Obviously, a large part of what you do is to create EBITDA for your own company.
Mm-hmm.
What are your other objectives? How am I going to stand out if I'm someone looking to bring in money to do this sort of thing myself?
Sure. So one of the most important things is finding out who is the person that we're actually looking to make a deal with. This is not a simple, here's our financing terms, take this 5-year loan, come back and pay us on a quarterly basis. That's you can do from a typical bank that doesn't know you very well. We're looking for a partnership mindset in a non-dilutive manner. And to do that, we want to make sure that the company has for us to be able to help, have at least 5 years of audited financials. So they've seen a bit of ups and downs in the market. So they've actually proven themselves. And they've have their own skin in the game in a big way. We don't like to do kind of any shares where the person is taking the loan and taking some money off the table. We want to see that person is plowing all that money into the growth of the business. Of all the types of loans that we come our way for private credit, growth is the number one. So we want to make sure that the alignment of the founder is truly aligned. Is this just one of his many businesses, her businesses, or is this really their baby? That makes a huge difference in whether we give time to that opportunity or we don't. Because, like you said, there's a lot of great companies coming up, but you have to be very disciplined in making sure that you stick with the folks that you know are there for the long term.
Let's continue this conversation with Omar in just a few moments' time. We've got Omar AlYawer, the partner at Ruya Partners, live with us here in studio. He's been kind enough to give us his time. So please keep your thoughts coming through to us now. You can text us on 4001. Continuing that conversation with Omar next.
This is Starting Up with Tom Urquhart and Virtue Zone.
Business setup.
Yeah, we are joined in studio by partner at Ruya Partners. Omar AlYawer has joined us live here in studio. This comes off the back, a number of successes for Ruya Partners, but none more so than the most recent one, $25 million to the tune of, with a form of private credit with GymNation to help them expand into Saudi Arabia. I've got loads of questions coming through. I know you've partly answered this, so I don't know if people have come in late, Omar, on the conversation or they need it clarified a bit more. But a lot of people texting in saying, I don't really get it. How does GymNation benefit from coming to Ruya rather than just going to one of the big banks at the moment?
It's a great question. Actually, first we got to look at the big picture of what the big banks, the 54 banks we have in UAE, plus actually even the banks throughout the GCC, who do they give loans to? So when you look at from a global perspective, you compare that with the West, with the US, Europe, and whatnot. Almost all the banks in our region, they did a study where they looked at what kind of companies they give loans to, the SMEs. What percentage of their loan book is to SMEs? In the West, about 22% of any commercial bank loan book is to the SME space. Hence why you have so many more SMEs there than you have here. Look to our region, particularly the GCC, less than 2% of any commercial bank's loan book is to the SME space. Partly because the banks here typically go by name-based lending, so they give it to family groups that they know quite well, or they do government-backed contracts. If you have a big oil and gas business that has a big agreement with one of the oil companies, great. But if you are a company like GymNation, which are usually asset-light, they don't own the actual gyms themselves, they lease them out. So it's an asset-light business. When they go to these banks that they don't know them personally, they don't know their whole family tree, very tough time for them to get an actual loan that helps them. They usually look for, hey, give me land to lien, give me an apartment that you own, which most of those entrepreneurs don't have, and they shouldn't have as gym owners. It was a gym franchise. So that's one of the things. So the banks don't play in the space, nor do they understand how to assess the business based on cash flow of the business. They look at hard assets versus cash flow. We're the other way. We look at the cash flow of the business. If it's strong enough to be able to sustain the loan that we give them, then we have discussions with them and be able to structure something that fits their growth need. Because at the end of the day, we will not be successful if our credit facility doesn't help them grow. Nobody wins. So we want to make sure that we're true partners, hence the name Ruya Partners. We're true partners to these companies to help them grow without diluting their shareholder.
So it's the clue is in the title there. It's a partnership.
Absolutely right.
Okay.
So you've seen, I mean, a lot of people see when they see some of my posts on LinkedIn about GymNation or about Energia in Saudi, which is one of the largest temporary power solution, or Starsplay, they think I'm an equity owner of the business.
Yeah.
I'm not. I'm a credit provider, but we actually meet them, think with them, and if there's any issues in terms of getting to new markets, we help them open doors with some of our relationships and network that you will not get from a bank. A bank will simply give you a loan, and on a macro level, if all banks decide to pull back lines, they'll pull back lines from good companies and not so good companies.
Yeah, Tom, there's an opportunity here. I mean, let's rewind a little bit. Allegedly, there are 550,000 SMEs in the UAE. But for the last 50 years of the UAE's existence, those companies didn't need to audit themselves. For the majority of the time, there was criminalization of bouncing checks. Yep. So a lot of things have been changed that when you first hear it, you think, oh, that's not very good for me. Oh, 9% corporate tax. Oh, I've got to do an audit. But these things enable you to build the foundations, enable you to be more transparent to potential investors. They can be frustrating to an entrepreneur that just wants to grow, but actually they're very important. And here's the opportunity for the likes of Ruya Partners. You can use technology. So a lot of the people that are lending money are doing it in a very, very old-fashioned way. They're looking, as Omar was saying, at specific areas, not at the whole picture. And they're probably not using technology to get access to as much data and analysis and trends as they could. So that's where companies can come in and you can lend and you can grow faster. And what VirtueZone does is it tries to do the whole spectrum. So, there's parts of this that Ruya Partners don't cover. There's opening your bank account in the first place. There's getting, before you've got 5 years of audited accounts, how can you grow? So we're trying to solve all of those, and you can't solve them with one partner. You have to have a range of partners. Yeah.
So to that end, and I know that there are no shortage of people listening out there who've got a bit of a side hustle along and go or looking for the right time to jump, to exit or otherwise. You've mentioned a couple of the brands that you've been involved with there, Omar, Starsplay and GymNation being just two of a list. Who's next?
So Starsplay, GymNation, as well as Energia in Saudi, we have a pipeline of, just for this year alone, close to $300 million of opportunities that we're in talks with as we speak. Now, to give you an appreciation for the time that it takes for us to do diligence on these underlying companies to make sure that the structure we're providing actually is helpful, from first handshake to actually finally signing is usually about a 6-month period, right? So one of the advice I would give entrepreneurs who are in the area where they are operating and they've had 5 years of audited financials, they're generating an EBITDA of at least $5 million and above, start having conversations with somebody like us or others early on. So GymNation, for example, we saw that deal 2 years prior. We stayed in contact. As with all relationships, whether it's personal or professional, first time meeting is not only the time you're going to really formulate a meaningful relationship. So what I would suggest to say to these entrepreneurs is start opening doors, even if you don't need the financing in the immediate term. That way, when the time does come that you do need non-dilutive capital, we already know you. We already kind of been following your journey, and that's what we do. We may say no the first time based on size, based on time, but then maybe a year or 2 years later, the equation changes completely and we know you.
We could proffer a bit of advice as well, couldn't we, Mr. Pete?
Starting with you, Tom, because by the time you finish speaking, I'll have some advice.
Okay, the advice I suggest is get hold of the show, because it wasn't that long ago that GymNation appeared on Starting Up with VirtueZone, and guess what? A couple of years down the line, they're $25 million better
10% to the house, don't you think?
But no, start those conversations, exactly as Omar is saying out there as well, because it is a competitive market. You know, we're talking about health and wellness. We're talking about health and fitness. That's competitive. But show me an industry, show me an area out there that's not competitive at the moment. If you're not thinking outside the box, you're going to get left behind.
And also, your company could be going great guns. There could be huge curves of growth. If you don't have a track record of paying loans back, then, you know, weirdly, some institutions are going to look at you, well, you've never done this, we don't know what, you know, and you're going to be like, what? What's that got to do with anything? It does. Get into the habit of it. Make sure that your books are as transparent as possible. Omar is going to really dig into the numbers of your company. So the more you're able to show him very, very quickly, think of that elevator pitch where you're selling on Dragon's Den. If you can do the equivalent of that financially, then they're going to feel a lot more secure, able to move faster. These guys, I mean, this is another thing about deal size, because the due diligence you have to do on a very, very small deal is not a lot smaller than on a big deal, right? Which is, again, tends to push people towards bigger deals. A lot of the listeners to this show have very small businesses, and that's one of the challenges that startups have in raising cash. So we want to make it as easy as possible, using technology, making sure that that's data there. So the fact that we have a sister company, Tax Ready, that is doing the accounts means, and that we have a series of services where we're offering something free to our customers, where normally they would be paying for it to help them send invoices and receive payment. All of that data is actually very valuable to companies and to people that are lending money.
I couldn't stress this more than you just did, Neil. You know, while we get great companies with great entrepreneurs, typically most entrepreneurs are not that financially savvy, and rightfully so, unless they're in the finance world, which not everybody is. So the biggest challenge sometimes is just getting their finances in such a disorganized fashion that it takes us a lot of time just to, you know, systemize it, and so that we can actually understand what are we looking at here. So having that kind of services that you guys offer is really beneficial for the entire ecosystem to make these kind of conversations with the likes of Ruya and others a lot smoother and a lot shorter, perhaps, because we're talking the same language.
Loads of messages saying, love this guy. Can we keep him on for hours and hours? We'd love to. Unfortunately, we are out of time. But Omar, just to keep the fans happy down here at the moment, the messages coming in, how do people get in touch with you and the partners?
Yeah, well, you can reach us on our website, ruyapartners.com. There you'll have all our contact information. We're Abu Dhabi based, ADGM, but we're always between Dubai and Abu Dhabi, as well as we're in Riyadh quite often. So if it's maybe a conversation that can start via email, then it can evolve to meeting for coffee and just getting to know each other.
And you're friends of the family, so you can always find Omar at Virtue Zone as well.
Absolutely.
Omar, I can't thank you enough for joining us here today. Hope you get a bit of rest during the summer months as well. Thank you for joining us, and all the best with the GymNation deal as well moving forward, the partnership moving forward.
Thank you, Tom.
Right, we're going to take a short little break now. Up next, a familiar voice on your radio. Probably heard him on the radio talking about cars in the past. Now he's going to talk about food and tech. Matt Davidson's going to be joining us, CEO and founder of Places, the newest dining app in town. That's up next.
Your ARN News.
Good afternoon.